A lot of times people get conflicting information from social media regarding tax rates, tax liability in general. Well, it's very easy, and I have to tell you that I'm a client myself, and I really hate watching people that instead of behaving like professionals, they look like salespeople, always looking for a deal. This is my personal opinion. Before I share with you any number, there are just a couple of assumptions we're making here. First, we are considering this amount as a personal income, so no dividends or passive income, just salary or employment income or contractor fees or something like that. Second, in order for me to simplify the topic, there is no tax benefit applied on any wealth tax software on the personal assets or money held abroad. So please state this before listening, okay? Let's take Paolo. Paolo is making 100,000 gross on a yearly basis. We're asking, what is the tax rate in Italy? What is the net left on the table? And what about Social Security, local and federal taxes? If you apply the progressive tax rates on the gross amount, the personal taxes due are around 36,000. Plus, we have to add some local taxes in the range of 1 to 5,000 more. In case, but just in case, there is a tax agreement in force between your country of origin and Italy, you may have the chance to deduct the income taxes already paid there or withheld if you receive a salary from the gross that you have to pay here. So eventually, you will pay just the difference. So now the net looks like around 64%, or with currency, it's 64,000. If you also have to pay into Social Security, we have to split between personal obligation and employer's contributions. Here in Italy, the rate is around 30%, so the pension retirement could cost you around, rounded up, 10% for your share and 20% for your employer. So now, the result is 54,000. And it looks like pretty fine, without any possible tax credit given by dependent relatives, educational costs, medical expenses, and so on. If on the other hand, you're a freelancer or a contractor, more likely you have some business-related expenses. But in this video, let's assume you don't have any, okay? Worst case, worst scenario ever. So on top of the personal income taxes, you also suffer the 26%, rounded down, of pension contributions due in Italy. In this case, the net would be around 48,000. And yes, we can argue about this. It looks like you're penalized by being a freelancer or starting a business here in Italy. But once again, we're cutting a lot of costs and deductions off the equation just to make the information more simply to digest. So in few words, after taxes, 100,000 looks like 54 to 48,000 net. Good news before I leave. Tax incentives can reduce your liability to 1/10 of your taxes due, pushing your net income up to 70 or 90% thousand net. Yes, this is why a lot of expats are planning to move to Italy. You can use this strategy up to 10 years. So now do the math and find how much you can save in taxes in 10 years.